It looks like the Federal Reserve giveth and taketh away the punch bowl on Wall Street as we enter a phase of the market called sell everything. Big jobs report tomorrow for the month of April, but with the data points we've been getting, which have been historical, jobs numbers might not matter right now. 10-year Treasury testing 3% on the 10-year and also testing the affordability of this already stretched consumer. To my realtor friends, I hate to say this, but housing supply is about to get a lot worse because of mortgage love. And there is some good news on the horizon, and I'll talk about that at the end of this video. Welcome back to This Week in Mortgage, everybody. My name is Sam Battaglia, your mortgage broker here at Guaranteed Rate in Beverly Hills. I hope you're having a great week. So the Federal Reserve did their thing yesterday. They raised 50 basis points. As you all know, I wish they raised 200 basis points to get the anxiety away, but we're still going to sit here with a dysfunctional, dislodged market that is very anxious and uncertain. So I'm not sure how they're going to continue raising rates into a squeezed consumer, but let's take a look at some of the major indexes as of closing today. Dow Jones down 11% off its all-time high. That is indeed correction territory. The NASDAQ tech heavy hit really hard, 25% off its all-time high. That is indeed technically bear market territory. S&P 500, which is probably more of an accurate depiction of the overall market than the Dow or the NASDAQ, is down 14%. Again, correction territory. Oil, that worthless commodity in my eyes, still holding steady over 100 a barrel. And gold is about 5% off its all-time high. And that's not even a flight to quality and safety right now, it looks like. And the last thing I'm going to talk about is Bitcoin. It's about, 45% off its all-time high. But I think Bitcoin is going to find its breakaway now from the rest of the markets, as it will certainly become the hedge of inflation for whatever you're trying to inflate or deflate. So I think Bitcoin will break away and will be the big winner when all is said and done. Now, as I mentioned, stocks are down. Earnings on Wall Street aren't great, and they are using supply chain as the scapegoat. All these big companies not making their numbers. We'll see how long that story can last. But as I mentioned, the Federal Reserve certainly should have went 200 basis points yesterday. They literally, you would have seen the stock market rally we had yesterday continue today. You'd have maybe seen the bond market have a rally today rather than the 10-year Treasury getting absolutely hammered as it did today. The Federal Reserve should have taken the uncertainty and the anxiety off the table and went 200 yesterday. Instead, they went 50. In my opinion, that's not enough. They even went as far as to say they're not even considering a 75 basis point rate hike, which is what the markets rallied off of yesterday. But today, again, they don't buy it for some reason. We'll find out why. But again, they should have went 200 and ripped off the Band-Aid, but now we just have to sit here and wait for them to make up their minds as we go. The Federal Reserve playbook right now is getting a little thin. I think a lot of trial balloons will be put out there in the next few months to get a gauge on the reaction of the markets and the consumer with some trial balloons that they'll put out there, because they don't have much to do other than raise rates right now and run off their balance sheet, which they've starting to sell some of their assets on their balance sheet to even that out. In case we haven't noticed, also, just a quick note, the Federal Reserve's job is to not make people that invest in the stock market rich, as everyone's finding out. The Federal Reserve's job is to balance the economy. Right now, that is a very tough balance that they're dealing with. Good luck to them. We'll see how this shakes. But understand, it's not their job to make your stocks go up. They need to balance the economy. Whether they do that or not is another thing, but their job is not to make stocks go up. And another quick note on the stock market. It looks like anybody with $1 can buy a share of stock right now. And the masters on Wall Street will tell you this. It's not about when to buy. You have to know when to sell. All right, enough about Wall Street. We'll talk about the jobs report tomorrow for the month of April that may not matter. The markets can only digest so much information between the four horsemen of the economy I've talked about, inflation, supply chain, logistics, jobs, geopolitics, and the Fed themselves. It doesn't even matter what the April jobs report comes out as tomorrow. I guess the only way the April jobs report could affect is if we created 50,000 jobs rather than how many they're expecting, which is in the hundreds of thousands, and maybe things will come off. But if all data comes in line, for the first time in a long time, the jobs report will not matter. I mentioned earlier we are having some historical data points on some things, two of them that I find interesting. I saw yesterday worker productivity was at a 50-year low, which is kind of insane because wages have been going up a little bit. Maybe people just don't care anymore. And then there's 11.5 million jobs open in our country right now. That's a lot. That's a lot of jobs. I don't care how you're measuring this. That is a lot of jobs. So these are all, that's an all-time high. These are all historic data points that we keep hitting from 50, 30, 40 years ago. Markets are dislodged and disconnected. Everything's at an extreme. Things will settle down. 10-year Treasury. Let's hope this settles down. It's crossed 3% now for the second time this week. The first time it crossed 3, fell back under. It did not like how it felt hitting its head there. But we are seeing the consumer affordability in the housing market at its absolute first time being thoroughly tested with affordability, and also if the consumer even wants to pay that much for a house. Because sometimes when it comes to mortgages with our clients, it's not necessarily what you can afford. It's certainly more so what you want to afford, and that is that time right now. And another little thing, housing prices, if rates stay here, and depending on how long they stay here, and if they go up from here, unfortunately, housing prices are going to have to adjust to affordability. But that said, values are very safe, and I will get to that. So, housing supply, as I mentioned, it's about to get worse. Mortgage love is real, and a lot of clients we have that we've put in new homes in the last 2 years, if they tried to buy that home today, could not afford it. They couldn't afford the mortgage payment, and since the values have gone up, they could also not afford the property taxes when you put it all together, figuring out their debt-to-income ratio for a mortgage. So, needless to say, it's going to be very hard to get somebody who couldn't afford their house today to sell their house to move into a new house that probably they can't afford that either. So, unfortunately, housing supply is about to get worse, and that is just a fact, unfortunately, for all of us. Now, the government will support housing and make it very safe. It will not fall apart like it did back in 2008 and 9. The government proved this out. During the last couple of years, they had mortgage forbearance. I want to say that default rates had to have been 0 because no matter what your circumstance was, you could have forbeared your mortgage. A lot of folks did that. Government will keep the housing market safe. And I have 5 reasons 1 through 5, why values in general are safe. They may adjust for affordability, but values are safe. There is 0 inventory. And I say 0 within reason compared to what is needed to fulfill the demand. And one last thing for everybody, we are in a very interesting period right now. Looks like our economy goes from boom cycle to bust cycle to boom cycle to bust cycle to boom cycle to bust cycle. The best part about this, everything is cyclical. Keep calm, things will settle, stock markets will settle, mortgage markets will settle, real estate market will then be able to be traded at a much more normal level when a mortgage broker quotes a rate on Monday and they're still within the same realm on Friday, which has not been the case for us for the last 2 months. So keep calm, everything will settle, and most importantly, please remember, everything is cyclical. Okay, everybody, that is my show for this week. I hope you enjoyed it. Thanks for listening along. As always, any mortgage or real estate related questions, please don't hesitate to reach out to me. Thank you again for watching. Have a great week.